Did you know there are total return ETFs out there that are clicking in north of 25? Hold on to your seatbelts, folks. This is going to be a good one. I am a huge fan of total return investing, and admittedly, most of my efforts have been with individual stocks. However, you can accomplish a great total return portfolio using just ETFs, as there are some really good ones out there racking up impressive total return numbers. If you are new to total return or dividend growth investing, as it is sometimes called, well, it is basically investing in assets that when you add their growth and dividends together, it gives you some of the highest returns out there. With income stocks or ETFs, you are generally quite happy when it is returning you north of 10%. With total return stocks, you can take that to the next level. And in fact, the ETFs we have today are all north of 25. Speaking of taking things to the next level, a sub to the channel would be elevating. When narrowing down the ETFs for today's list, I did use a few criteria to help me out. I only looked at ETFs with a year-to-date growth of 10% or higher, and I also focused in on ETFs with a dividend yield of at least 5% or better. Between that growth and dividend criteria, I was guaranteed a minimum total return of 15%. But as you all know, we did better than that. This list is sorted by their year-to-date total return, and without any further ado, let's do this. Kicking off this list, we have the CI Tech Giants Covered Call ETF with a ticker of TXF.B. They aim to provide exposure to a diversified portfolio of the largest technology companies, and they also employ covered calls to help boost that income. Their current price at time of recording was $28.10. They have an NAV of $27.93. Their assets under management, that comes in at $87.11 million. Their beta, just a little bit more volatile than the market average at 1.28. That return on equity comes in at 27.75%, and their return on assets are at 11.90%. Let's talk a little bit about fees. They got a management fee of 0.65% and a management expense ratio of 0.69%. On to the dividends, they do have a yield of 7.357%. It's a quarterly dividend of 64.6 cents per share. Let's take a look at them returns. On their 3-year, that return on investment comes in at 16.45%. Add in those dividends, we get a total return of 39.98%. On their 1-year, the return on investment comes in at 34.19%. Sprinkle in some dividends, we get a total return of 44%. On their year-to-date, that return on investment comes in at 23.25%. After we add in those dividends, total return 28.37%. That's not too shabby for starting off our list. Their top 3 holdings are Salesforce, ServiceNow, and Intuit. It actually almost seems odd to have a tech ETF with a lack of the Magnificent 7 at the top. Nonetheless, it does seem to be working for them. Coming in at number 4, we have the Harvest Tech Achievers Growth and Income ETF with a ticker of HTA.B. They seek to provide a solid monthly income as well as some growth from their portfolio. They invest in 20 large-cap technology companies with a mostly equal weighting. Their current price comes in at $20.25. They have an NAV of $20.15. Their assets under management come in at $632.16 million. They do have a beta of 1.34. Return on equity, nice looking 37.20%. Return on assets of 14.14%. Their management fee comes in at 0.85%, and they have a management expense ratio of 0.99%. Their dividend has a yield of 7.10%. It is a monthly dividend of 13 cents per share. On the 3-year, their return on investment comes in at 29.23%. Add in the dividends, we get a total return of 52.52%. On their 1-year, the return on investment comes in at 29.56%. After we add the dividends, we get a total return of 38.71%. And finally, their year-to-date return on investment comes in at 25.23%. Sprinkle in those dividends one more time, we get a total return 31.23%. Their top 3 holdings include Nvidia, Apple, and Applied Materials. Mind you, where they have an equal weighting, they are not that far apart in their portfolio share. This is really starting to look like a tech fest, and the next one's not going to change that. Taking our 3rd spot, we have the Harvest Tech Achievers Enhanced Income ETF with a ticker of HTAE. This one invests in, well, the previous one, HTA, but it adds a little bit of leverage and covered calls to enhance those returns. Their price comes in at $17.92, and they have a NAV of $17.91. Their assets under management come in at $75.58 million. They've got a pretty average looking beta of 0.96. That return on equity, that comes in at 37.03%, and their return on assets, they're coming in at 14.11%. Their management fee comes in at 0%. That looks like a great deal, but take a look at that management expense ratio. That's coming in at 2.57%. On to their dividends, they have a yield of 8.685%. It is a monthly dividend of 15 cents per share. Let's look at their returns. On the 3-year return on investment, that comes in at 75.17%. Factor in the dividends, we get a total return of 99.71%. Holy banana bread, that's not too shabby. Now, they were created in October 2022, so they haven't actually been here for 3 years, so that 3 year is actually closer to a 2-year. On their 1-year return on investment, that comes in at 29.39%. Sprinkle in those dividends, we get a total return of 40.62%. And in this year, year-to-date, that return on investment, 24.19%. Add in our dividends, we get a total return 31.53%. Their top 3 holdings are, well, the same as HTA with Nvidia, Apple, and Applied Materials. Normally, and this is going to kind of explain why I included this one, normally the non-covered call version does better on the total return, but this one's an exception, as HTAE beats HTA on all of our time frames. In our almost top spot at number 2, we have the Hamilton Gold Producer Yield Maximizer ETF with a ticker of AMAX. This ETF employs covered calls on their portfolio of their basket of large cap gold producers. In this case, all that glitters just may be gold. Their current price comes in at $20.46. They have an NAV of $20.44. Their assets under management come in at $119.96 million. They are pretty volatile, as in more than twice as volatile as the market average. Their beta, 2.12. They do not yet have a return on equity or a return on asset numbers. We do have a management fee of 0.65%. They have yet to release their management expense ratio. They're a very new ETF. The current yield they have is 9.171%. Monthly dividend of 16.7 cents per share. They were created this year in February, so we actually only have year-to-date data for them. And well, year-to-date, that return on investment, 28.92%. Total return, 33.86%. Their top 3 holdings are Kinross Gold, Anglo Gold, and Pan American Silver Corporation. With gold expected to have a strong year, this could be very good news for this ETF. In our top spot at number 1, we have the TD Active US Enhanced Dividend CAD Hedged ETF with a ticker of TUEX. This ETF aims to provide a combination of income and growth by investing in dividend-paying U.S. companies across various sectors. Fund utilizes an active management strategy, aka covered calls, to enhance that income. Their current price comes in at $25.78. They have an NAV of $25.72. Their assets under management, $6.27 million. Their beta, 0.86, so they're a little bit less volatile than the market average. We do not have a return on equity or a return on assets for this one. Their management fee comes in at 0.65%, and we do have a management expense ratio of 0.72%. Their yield, a little bit on the higher side, 11.304%, monthly dividend of 5.3 cents per share. On their 3-year, that return on investment comes in at 28.13%. Factor in some dividends, we get 43.11% for our total return. This ETF was created in April of 2023. So this 3 years kind of closer to a 15-month return. If we look at that 1 year, the return on investment comes in at 18.69%. Factor in the dividends, total return 32.08%. Here we go. Year to date, that return on investment 26.62%. Wrinkle in those wonderful dividends and we get a total return of 39.60%. Their top 3 holdings via the underlying TUED ETF is Apple, Broadcom, and Alphabet. This is an under-the-radar sort of ETF, but they sure do have some total return chops. I found it very interesting just how much technology filtered into this list today, and that does make sense. As the AI craze, it continues going strong in the market. I do believe there is still a lot of runway for AI, and that will be a good thing for these ETFs we looked at today. If you are interested in any of these ETFs, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on growth ETFs. Thank you for watching, and I will see you in the next video.